Have you ever entered a trade thinking the trend will continue, but suddenly the market reverses and hits your stop loss? If yes, you're not alone. There's one powerful signal that often appears right before a major trend reversal. It's called the Evening Doji Star, a dangerous sign for buyers and a golden signal for short sellers. In this video, you'll learn what is the Evening Doji Star candlestick pattern, how to identify it perfectly on charts, where to enter, place stop loss, and take profit, and how to use it with confirmation tools for deadly accuracy. Let's dive in. What is the Evening Doji Star pattern? The Evening Doji Star is a 3-candle bearish reversal pattern that appears at the top of an uptrend. It's a sign that bullish momentum is weakening and bears may be preparing to take over. The pattern looks like this. 1. A strong bullish candle, buyers are in control. 2. A doji candle signals indecision and possible exhaustion. 3. A strong bearish candle confirms reversal. The presence of a doji in the middle sets this pattern apart from the regular evening star. The doji represents uncertainty, which when followed by a bearish candle, indicates that momentum has shifted from buyers to sellers. Psychology behind the Evening Doji Star. Understanding the psychology of this pattern is key. Candle 1. Buyers dominate, bulls push price higher with confidence. It seems like the uptrend will continue forever. Candle to doji, suddenly, the market opens, moves a little in either direction, but closes near the same point. This creates a doji showing indecision or bear exhaustion. Candle 3. The next session opens lower and closes even lower. Sellers step in aggressively, trapping the late buyers. This is a clear shift in market sentiment. Smart money is exiting long positions and entering shorts. How to identify the Evening Doji Star? To correctly identify this pattern, look for these 5 rules. 1. Location. The pattern must appear after an uptrend. 2. First candle. A large bullish candle green showing strong buying momentum. 3. Second candle doji. The body is very small. Open and close prices are nearly the same. Shadows can be long or short. 4. Gap up optional. Often, the doji opens with a gap above the first candle. 5. Third candle. A strong bearish candle red that closes below the midpoint of the first candle. The more precise these criteria, the stronger the reversal signal. Entry point strategy. Here's how to enter the trade. Wait for the third candle, the bearish one, to close. Confirm that it closes below the midpoint of the first bullish candle. Enter a short position at the close of the third candle or on the next candle's open. This ensures you're trading with confirmation, not just prediction. Stop loss placement. To protect your trade, follow this rule. Place your stop loss just above the high of the doji candle. This level is usually the highest point in the pattern. If price breaks this level, the pattern is invalid. Always protect your capital. Smart traders always use stops. Take profit strategy TP. There are 3 ways to set take profit. 1. Fixed risk reward. Use a 1:2 or 1:3 RR ratio. If your stop is 30 pips, aim for 60 or 90 pips profit. 2. Support zone targeting. Set TP near the next major support zone. 3. Trailing stop. Use a trailing stop to ride the trend and lock in profit as price moves in your favor. Let the market give you more if it wants to. Risk-reward ratio. Why it matters. The Evening Doji Star offers great RR opportunities because you're entering at the top of a move. Let's say, stop loss, 30 pips. Take profit, 60 pips. That's a 1-2 to risk reward. Even if you're right only 50% of the time, you'll stay profitable in the long run. How to increase accuracy pro tips. Here are 5 powerful filters to improve accuracy. 1. Use higher time frames, H1, H4. Daily charts give stronger signals. 2. Check volume. If volume drops during the doji and rises during the bearish candle, it confirms reversal. 3. Combine with RSI or stochastic. If RSI is overbought, it's an extra sign. 4. Location near resistance. If the pattern forms near a resistance zone or trend line, the reversal is more likely. 5. Wait for retest. Some traders wait for a minor retest of the breakout before entering. Common mistakes traders make. Avoid these for mistakes. 1. Trading it in the middle of a range. This pattern is only reliable at the end of an uptrend. 2. Ignoring volume. Without volume confirmation, the signal is weak. 3. Entering before the third candle closes. Premature entries often lead to losses. 4. Forgetting risk management. Never trade without stop loss. Backtesting the pattern. Before using it live, test it. Use a demo account or Trading Views replay feature. Go back in time. Find Evening Doji Star setups, record results. How often did it work? Backtesting builds confidence. Using Evening Doji Star in algorithmic trading. Yes, this pattern can be coded into bots. Many algorithmic systems look for this pattern combined with RSI overbought, MACD divergence, moving average crossovers. It's a strong rule-based signal even for robots. How smart traders use it. Smart traders don't trade the pattern blindly. They use it as a confirmation tool like this. Market is in uptrend and approaching a known resistance. You notice bearish divergence on RSI, Evening Doji Star forms at the top. You enter a low-risk, high-reward short. This kind of analysis makes pros consistent. Which markets does it work on? This pattern is powerful in Forex war, USD, GBP, JPY, etc. Stocks Apple, Tesla, crypto Bitcoin, Ethereum. Commodities gold, oil, indices S&P 500, Nasdaq. Works best in trending markets near key levels. Timeframes that work best use H1, H4. Daily, reliable and cleaner signals. Avoid M1, M5 unless scalping with experience. The higher the time frame, the stronger the signal. Final recap, let's review. Evening Doji Star is a 3-candle bearish reversal pattern. Appears at the top of an uptrend. Signals bear exhaustion and potential trend change. Ideal entry after third candle closes. Stop loss above the doji high. TP, risk, reward based or next support. Use confirmation tools for accuracy. Used properly, this one pattern can save you from losses and give high-quality short setups. If you learned something valuable today, don't forget to like this video, subscribe to Tradeverse Insights, and comment below. Have you ever used the Evening Doji Star? Also, check out our full candlestick pattern playlist where we break down patterns like Morning Star, bullish engulfing, 4-price doji, long-legged doji, and more. Until next time, trade smart, stay patient, and always protect your capital.